Hi, I'll take you through the key global cues today. Well, if you look at the Asian stocks, it's been a mixed open and US futures slipped as traders await key American jobs data later this week to help gauge the overall economic outlook. The offshore yuan held a retreat after China forced banks to keep more foreign currencies in reserve for the first time in over a decade, its most substantial move yet to rein in the surging currency. In Australia, the central bank is expected to keep loose policy settings unchanged, but it may be getting closer to a decision on whether the economy is strong enough to join Canada as well as New Zealand in signaling a move from the emergency stimulus. Australian markets were down close to around 0.4% in trade, while Kospi was flat. Nikkei was up nearly around 0.5% in trade. If you look at the US markets, well, they were closed for a holiday. US futures slipped along with European stocks on Monday as traders await fresh catalysts with the key American jobs data later this week set to provide further clues on the outlook for the world's biggest economy and lingering inflation concerns. In Europe, the European stocks slipped from record highs in subdued trading due to holidays in major markets, but optimism over a swift economic recovery helped the Stoxx 600 index mark its fourth straight month of gains. Despite lingering worries about rising inflation, the Stoxx 600 posted a 2.1% rise in May as economies gradually reopened after lockdowns and central banks reiterated support to aid the recovery. Dovish comments from European Central Bank policymakers, including President Christine Lagarde, who said it was too early to discuss slowing its pandemic emergency bond purchases, helped support the overall sentiment last week. In fact, in Europe, the DAX was down close to around 0.6%, while CAC was down nearly around 0.6% in trade. If you look at the oil, well, the WTI crude did rise nearly around 0.9% to $67 a barrel. Oil has climbed as OPEC and its rallies forecast that inventories will fall sharply this year if the group sticks to its current overall plan. And if you look at the gold futures, well, they have risen again 0.2% up in trade to $1910 an ounce. Gold has had its biggest monthly advance since July 2020 on the back of inflation fears, and of course, given the uncertainty across the global markets, gold definitely is used as an inflation hedge, and also people do flock to gold as to diversify their overall asset mix. So yes, keep a watch out on gold as well, but so far it's kind of a mixed open for the Asian markets.